Kendrick Chua says there is nothing to blame but the COVID-19 pandemic. Chua says prospects for the Philippines to hit the upper middle income status this year have become bleak as the pandemic takes a toll on our economy. But Chua says the goal may still be attained come 2021. That's on the back of rebasing done by the Philippine Statistics Authority, or the PSA, in measuring GDP. The PSA has began using 2018 prices. That's instead of the much older 2000 prices. The PSA earlier said the rebasing was carried out to ensure that activities in relatively newer industries such as accommodation and ICT are recorded. The World Bank defines an upper middle income economy as having a gross national income per capita as between $3,996 and $12,375 included in this bracket are Malaysia, Thailand, and China. The Philippines has had a per capita GNI of around $3,830 in 2018. That's enough for the grouping of lower middle income economies. The Philippines is joined by Vietnam and Timor-Leste in this classification. Now, the country's economy shrank 0.1% in the first quarter. That's on the back of the eruption of the Al volcano in January, as well as the Luzon-wide lockdown, which started in the middle of March. Nomura Global Markets Research is warning that credit rating companies may downgrade the Philippines' debt rating to negative. That's amid the dimming prospects caused by this crisis. Metro Manila, Calabarzon, and other high-risk areas remain under enhanced community quarantine until May 15 as the government continues to grapple with the crisis. President Duterte is expected to decide later today whether this ECQ will be lifted, extended, or modified post-May 15. The IATF will be meeting today and will later on submit the recommendation to the president. Metro Manila's 17 mayors earlier said they will be presenting 3 scenarios to the IATF for after May 15. The first is actually a 2-week extension of the ECQ. The second is a shift from the ECQ to general community quarantine, where restrictions will actually be loosened. And finally, the third option is a modified quarantine, which will see a bit of a mix between the ECQ and the GCQ. Presidential spokesperson Harry Roque earlier said that not all of Metro Manila will remain under ECQ. Checking in on local markets today, let's take a quick peek at my Bloomberg terminal here and see how we are faring this first trading day of the week. We're up 0.6% to 5657.30. And this amid the fact that some analysts had pointed out ahead of our opening that we are likely to be moving sideways this week. Everyone is on wait-and-see mode. What is the president going to be saying? Likely to be late tonight pa. Usually yung mga press conference niya. Recall, nevertheless, last Friday, we actually had slid down 0.5%. And on a weekly basis, we were actually down by 1 4/10% last week. That snapped 2 straight weeks of an uptrend. But the good news is that the value turnovers were actually increasing last week. We improved by close to 15%. And even if foreign investors remain net sellers, at least that selling sort of tapered off a bit towards the end of last week. Now, Two Trade Asia is saying that this week's attention, of course, as I'd already mentioned in the banner, will all be focused on what is the government going to be doing after May 15. And yet, amid all of this, we do see our bourse, again, as I mentioned, 5,600 levels. We do have some more optimistic projections in terms of from FMIC and UANP. They're hoping or seeing the index to actually strengthen in the second half of the year to end above 6,000 levels. Yet this is still a downgrade of what they had previously given from 8,600 to 8,900. Now, just a quick peek at our net foreign selling, as I had mentioned, continuing there, but still on a softer pace. And in terms of that, you've actually got the Bangko Sentral reporting that around $1 billion of hot money left the Philippines just in the month of March. Now, this is, of course, a combination of stocks, which comprise around 93% of the basket, but also just their investments in our treasuries and fixed income here in the Philippines. According to the BSP, this is all on the back, of course, of negative sentiment. This has prompted investors to liquidate and move towards safe haven stocks. And apart from just the COVID-19 pandemic, you've also got other issues hounding on March: US-Iran tensions, trade negotiations between the US and China, and even regulatory issues like the review of the water contracts had affected foreign investor sentiment. Now, just a very quick touch on our airlines here, just to note here that NAIA is actually resuming international charter and commercial flights starting today on specific designated days. Commercial flights will be allowed on other days of the week except for Monday and Thursday, but you've got also chartered flights which will be allowed to land in NAIA on Mondays and Thursdays. This is until June 10. Now, just a quick peek at another big gun that has just released their earnings, Ayala Land. Take a look at your screens here. Profit for the first quarter falling 41% to 4.3 billion pesos. That's on the back of home office sales plunging on in terms of the lockdown, and also just the volcano eruption. Now you can see here how they have fared. So revenues down 28% to 28.4 billion pesos just in the first quarter of the year. Residential down a hefty 40%, and the office for sale down close to 70%. Shopping centers down less than double digits, so that's down 9%. And just one bright spot here is office leasing. They say that actually went up by 15% on the back of BPO still continuing to work and pay leases, basically. In their property area. On the back of this, Ayala Land is also planning a 6 billion peso retail bond sale in the month of June. Note that their CFO had said earlier on they're planning to refinance the relatively expensive and short-term loans. Now you're going to be seeing on my screen here how Ayala Land is opening. They have, of course, announced this yesterday. I recall that their parent company had surged very high last week. That was the highest in 10 weeks on the back of these news that they might be renegotiating their water contracts. Ayala Land opening up 0.8% to 32 pesos and 90 centavos. Also, just a quick peek on our media stocks, because we just wanted to highlight some news on ABS-CBN that had been all over the news as of late. And you're going to be seeing ABS-CBN saying that they're losing 35 million pesos per day that they're not airing. So 35 million pesos per day. The company is saying they will not be able to service their debt. This would constrain their creditors. They would to require collateral for their loans. Recall that they're still suspended from trading. You can see that on my terminal here. And relatedly, a lot of rumors here on whether Dennis Oy will be picking up this battered stock, and he has said very, very clearly in a statement on his website, not interested in acquiring ABS-CBN. Now, speaking of suspended stocks, one last to be reporting here, San Miguel Corporation, which is at a trading halt. This is after Lafarge Holcim said that their Philippine stake deal, so recall that SMC had been saying that they are interested in buying Holcim Philippines for 86% of a stake. This has now lapsed simply because the Philippine Competition Authority did not issue an approval of the transaction within the required time. Incidentally, they're also withdrawing their tender offer for Holcim. So they were supposed to have a tender offer as well, and that will now be lifted. So SMC trading up 1 peso, that's up by 1% to 97 pesos and 50 centavos. More on markets later on in the broadcast. Meanwhile, checking in on headlines this Monday, insurance firms are hoping for some regulatory relief to temper the impact of the COVID-19 pandemic on the industry. The Philippine Insurers and Reinsurers Association is calling on the Insurance Commission to either suspend or lower the minimum net worth requirement of 900 million pesos, which is this year, until the next. This is after the value of the insurers' assets were eroded by the market volatility. Under the insurance code, insurers must have a net worth of at least 900 million pesos by 2019 and 1.3 billion pesos by 2022. New players must also have at least 1 billion pesos in paid-up capital. The group warns that continuing such a level of requirement amid weak market conditions as well as a bleak economic outlook may slash half of the industry, particularly the non-life insurers. Insurance Commission Chief Dennis Funa said insurance companies are, quote, well capitalized to weather the risks of the COVID-19 crisis, although he recognized that investments and sales will see a hit. Sales of life insurance products slumped in the first month of the lockdown, with most financial advisors facing the movement restrictions. According to the group, most clients still prefer traditional face-to-face meetings before they do get a policy. While the Finance Department sees inflation as continuing its slowdown, that's in the next few months, but the agency says this is only possible if the delivery flow of basic goods and supplies remains unhampered, even if the ECQ will be extended beyond May 15th. Now, recall that the collapse in oil prices generally pulled down headline inflation from 2.5% in March to 2.2% in April. The DOF noted that to maintain this easing trend, the supply of basic goods and other necessary items should, quote, not be broken, but still subject to the requirements of public health. The agency also said the average price growth in non-food items had slowed to 0.7% year-on-year as the slump in global oil prices drove down domestic pump prices and consequently the transport costs. The DOF said this more than offset the uptick in the food prices. Overall, the Department of Finance said the month-on-month inflation was negative for the third month in a row in the month of April. The country's exporters are calling for the immediate passage of the government's economic stimulus bill. This measure could inject some 475 billion pesos into the economy during its first year of implementation to help the businesses recover from the COVID-19 effects. This plea was made by PhilExport, or the Philippine Exports Confederation, to Albay Representative Joey Salceda, who also heads the Economic Response Stimulus Package cluster of the Defeat COVID-19 Special Committee in Congress. PhilExport explains this measure must be passed within a month to help MSMEs, which account for around 60% of the country's employment and 30% of our GDP. The export group also said it supports the position of the PCCI, calling for more farming aid, public transport subsidies, and loan flexibility for MSMEs. PhilExport proposed that the 10 billion peso budget for agri-fishery be at least doubled to help address productivity, technology, as well as climate change issues. This COVID-19 pandemic has brought out solidarity among Filipinos, but has also highlighted some deficiencies, many deficiencies in our system. Here to help share his suggestions with how the government should be moving forward, we have with us on the line Sonny Africa, is the Executive Director of Ibon Foundation. Hi, Sonny, and welcome to the broadcast.
Hi, Danny. Good morning.
Good morning. Now, Sonny, you're known for your contrarian views in terms of economic policies. Now, this is a good thing. You know, we need that check and balance always. And we had actually requested for your insights today. But tell us, you know, now is not the time to be backward looking and saying we should have done this, the government should have done this. Now is the time to say, okay, what do we have and how can we use it to get through this crisis together? Tell us, what's your sentiment on whether the government has done that, used the tools it has in its arsenal right now, and just your basic reaction to that?
Well, I think we should start from the premise that the crisis really is big enough for us to revisit our accustomed parameters to social economic policy. So like I said, it's all about the government using tools. Our main frustration is that the government isn't expanding its toolkit. Despite the seriousness of the situation, needing much larger government intervention in terms of health measures, but also in terms of boosting the economy, the government has stayed, unfortunately, has basically stayed true to its accustomed tools, which are too small and too weak and too undirected. So just to be very straightforward about that, we think it is not giving enough social economic support in the 2 months of the lockdown. And secondly, we don't think it's actually going to be giving enough social economic support, even with a seemingly huge stimulus bill in the period to come. So we think there's quite a lot to be done. We just have to sort of, I think, be more candid. It's a huge economic and health crisis. We really need a huge solution, and we won't get that huge solution if we stick to our accustomed parameters, which are too small, and the tools can't be the same tools we've been used to.
Okay, we'll dig deeper into the specific fiscal measures later on. Just a very quick take on what the government should be doing. I mean, they are debating today on whether to extend the lockdown in NCR or to move towards an an GCQ or a mixture of the two. Is there even enough data at this point in time to warrant such a big decision like lifting or gradually lifting the lockdown?
Among the most difficult things we're dealing with right now is uncertainty in the market, but also actually uncertainty in health. I think the criticism about the DOH's data are well founded. So the question now is, I think, mainly given our imperfect data about the contagion, but given our imperfect but clear data also about the problems people are facing, I think the question is, amid that uncertainty, what should we do? We think it's actually quite straightforward. Even if we grant the importance of the lockdown, especially in the early period to contain the virus, the lockdown cannot go on forever. We have to be balancing the risks of socioeconomic displacement with the risks of contagion. I think we have reached that point where the risks in terms of socioeconomic displacement are quite near or maybe even worse than the risks of health contagion. If there's an increase in deaths from a lifting of the ECQ, I think unfortunately, I know you said not the time to look back, but that's going to be the government's own account. The last 2 months have been a huge disruption in people's lives. If it was meant to buy time to implement public health measures, the sad thing is this time has been paid for by the suffering of really tens of millions of Filipinos, but the government has really been lagging in terms of creating the public health measures in terms of containment and suppression, from testing to tracing to isolation. It hasn't used that time well to put in place the controls for the needed for the period to come. So dragging on the ECQ will cause suffering. Unfortunately, that is the government's account. The market won't solve that aid problem. If the
Okay.
ECQ is lifted, the government has not put in place the health measures. Any deaths will also be on the government's own account.
Okay, so regardless, parang you might as well open it now because it's not as if it could improve in terms of health
Ah,
improvement if this is extended, you mean?
Um, well, I'll rephrase. I think because things are so uncertain about the trajectory of the virus, the nature, whether we're developing some kind of natural immunity or artificially, because things are so uncertain about the trajectory, the question is if the government makes a policy decision based on that uncertain information to extend the ECQ, it should facilitate emergency relief to many people. If the
Okay.
government, as a policy decision, decides to lift it, it should make sure that the testing, tracing, isolation mechanisms are in place. So for us, there's no perfect information, but one thing the government has control of is what it does with what either decision it makes. So I think no one in the right mind will be able to predict whether the socioeconomic risk or the health risk from lifting. So for us, what's within our control, it's in the government's control to give aid much more expediently under these key conditions. It's also within the government's control to ensure that the public health measures in place are there outside of the ECQ. So I think it's unfortunately the burden is on the government, but that's its job, I think.
Sir, we're already in May actually, and we've had a first quarter GDP figure surprising on the negative. It's huge surprise, especially since it just took account two weeks of a lockdown. Gonna try and show for our viewers here your projections on how bad it can get in terms of displacement of workers. There's still several economists and analysts still
Mm.
predict a second half recovery, still seeing a positive growth. Now, we're in May, almost mid year. Is that even a remote possibility?
Well, first, a preliminary point. It shouldn't have been a surprise that growth went negative in first quarter because even if the lockdown was implemented just in the last 2 weeks of the first quarter, the reality is the economy has been slowing for the past 3 years. If you look at the annual growth rates in 2017, 2018, 2019, growth has been slowing. So actually, there has been no growth momentum. We have been slowing. All the lockdown did was to accelerate that growth, worsen that growth slowdown. So I think it's not really a surprise that that happened. Will there be a recovery in the second half? again, it seems quite unlikely because most of the lockdown will be felt in the second quarter. Um, the lockdown will has caused closures already, has disrupted livelihoods. Will that easily be able to become in the second half? It's not likely. Why? Because we will realize once the distraction of the lockdown is lifted, the world is in its worst recession in at least
Mm.
decades, possibly since the Great Depression of 1929. And for an economy that's been so reliant on overseas remittances, on manufactured exports, on exports of services like BPOs, that kind of global recession will actually have, I think, very strong dampening effect on second half growth. So, again, our thinking is. You also mentioned the point about geopolitical uncertainty, U.S.-China friction. You also talked about something happening in Iran. I mean, the global situation is so uncertain, like I said, we should revisit our custom parameter that we can rely on something from the global economy in terms of remittances and exports or foreign investment. We should realize that pillar of support is not going to happen. The rational thing to do is focus on the domestic economy. And focusing on the domestic economy involves greater intervention, spending more, nurturing domestic producers more. I think that's the way to go. And I think that's so critical. If you want some semblance of recovery in the second half, we should let go of this thinking that we can rely on our custom pillars of economic development because those fundamentals are just not there anymore.
Okay, so they were actually weak even before this pandemic came into play. So do you feel that regardless of how this lockdown would go, even if it's lifted on May 15, and they are putting in stimulus for the MSMEs and adding there's new package that they want to come out, this will still not be enough to at least temper the effects of the COVID-19, or stimulate even the BSP easing and giving us more loans, liquidity. Is this not at least enough to spur some domestic consumption in the second half?
Well, we haven't seen the final. I think the bill's still under discussion, but at least the version of the stimulus bill we've seen is about 1.5 trillion. Um, Actually, we still think it's not enough.
Mm.
Of course, some spending is well, more spending is better than no spending. But I think right now, because the problem is so big, we really need to spend much more. So our main suggestion in terms of the stimulus program, at least being crafted by the legislators right now, yes, it is an unprecedented bill. It's the biggest stimulus package in Philippine history, but it's also an unprecedented big problem. It's still
Oo.
too small. We should generate more resources to spend more. Secondly, once we have a bigger pie for stimulus package, we should give much more attention to the government stepping in to restore household incomes because even beyond the lockdown, a huge part of our economy is just not going to be earning enough to even just get by. We have a huge subsistence community and at the very bottom. We have millions with very low incomes but still vulnerable. Those people need to maintain their consumption, to maintain their welfare. So the government stepping in to restore their consumption both improves their welfare and also stimulates the economy. So I think there should be a bigger bias towards supporting poor households. In the current bill, only about 100 billion, I think, out of the 1.5 trillion is devoted to wage subsidy. So that's far from enough. Last point, the support to MSMEs and business actually I think quite important, but we can be much more strategic in how that money is spent. You mentioned earlier about how the 10 billion loans for agri-fishery should be going towards climate change related measures. Actually, I think we should step back, have an even long-term strategic focus. A lot of our support for MSMEs and if they're going to be support the large enterprises should be towards enterprises that strengthen the national economy in terms of expand agriculture production, expand domestic manufacturing. I disagree that we should be supporting any sort of foreign import-export firms. I don't know if they're excluded, but I think a strategic choice should be more support for MSMEs in manufacturing and in agriculture. And if we have that explicit bias, I think that will put us in a better position to deal with this huge global uncertainty, not just for 2020, but I think for the years to come.
So we're actually showing our viewers here on their screens what you're suggesting, and these are pretty concrete steps. One of which is let's redivert close to 900 billion worth of build infra funds. This is already something that our finance secretary said gonna derail. This is something that we need. The BBB needs to proceed as planned in to the extent that it can to have jobs. Second, you're asking for or suggesting for us to ask for debt relief moratorium amid us already getting a downgrade in terms of outlook from Fitch. Will this not derail foreign investments as you've already mentioned? So tell us why you're suggesting these movements.
Okay. Starting from the, I think, valid premise, we're facing a huge problem. We should revisit our custom tools. Now, in a earlier situation, yes, we should be concerned about our credit ratings. We should be concerned about our infrastructure and all that. But I think it's all the big question now is we need a big response. How do we finance that big response? Because right now, the government has a very small response because it's unwilling to tap these new possible funding sources. So in terms of realigning the infrastructure, we do agree a lot of infrastructure, especially labor-intensive infrastructure, will be useful. But we suggest add two parameters to what infrastructure projects to continue. First, focus on infrastructure projects where the spending is mainly in the Philippines, on local inputs, on local labor. If it's a project that's going to be having huge amounts spent on imported equipment or imported consultants or imported firms, we don't
Okay.
think that's a priority right now. In terms of the kinds of activity, I think it's quite clear health infrastructure is a great priority right now in the coming period. So I think a lot of tourism related projects in a world where tourism is going to be collapsing about 10-20%, I think, or according to the United Nations, social priority should be given to building
Okay.
hospitals, staffing them. So that's the kind of social infrastructure we should need. In terms of the debt relief, debt moratorium, I think DOF should stop pretending we're a rich country and should also stop pretending that the paramount concern is our credit ratings. There is a move right now, even among uh, the IMF and the World Bank, to start granting much bigger debt relief to countries. I've also heard a proposal where things are so bad, the IMF should start issuing SDRs as additional liquidity to the global economy. So I think that rethinking at the global level should happen at the Philippine level as well. If we're wondering where to get money to put in people's pockets, I think it's quite fair to tell our creditors right now, prioritizing development agencies and
Natin ng
bilateral
pera.
creditors. I'm so sorry. We want to pay. We have a good record of paying, but it's really urgent right now. We promise to pay in the future. So I think at least consider restructuring our debt payments to use our appropriations for 2020 for more urgent needs. And over the long term, I think that will not be sustainable. We still need to generate new cash because realigning infrastructure, realigning debt does not generate the new money, just sort of moving from one basket to the other. In terms of increasing the resources we have in the long term for development needs, we have to realize the Philippines is a kind of society where there's a lot of prosperity for a few at the very top, with huge amounts in subsistence at the very bottom. That is where we get the money. We're proposing two things, and I think they're quite sensible, especially in time of crisis. Government can issue the COVID-19 emergency solidarity bonds. We talked earlier about solidarity in time of crisis. Because putting your money where your mouth is, to the extent that big financial institutions, large firms, rich families have cash lying around, let's tell them, hey, the government can say we're issuing zero interest, no interest, or negative interest bonds. Show your solidarity in time of crisis. Can you buy into this? And I think
Money.
if the government can generate from that, that is a show of solidarity, putting your money where your mouth is. But over the long term, it is a very nagging problem for us that our credit ratings have been built on the back of higher consumption taxes. That is completely unacceptable. Even the United Nations has acknowledged that consumption taxes are regressive. In a situation of huge inequality in the country, we need taxes over the long term. Let's tax where the money is. A wealth tax of 1% over 1 billion, 2% over 2 billion, 3% over 3 billion. A wealth tax like that on just the 50 richest Filipinos can generate 237 billion pesos already without affecting their welfare, without affecting their businesses. So I think let's start tapping these sacred cows. It's a time of crisis. It's a huge problem. If we're
There's
not used to touching them, let's not touch them. If we're not used to touching them, let's change that. We should change that attitude.
Okay, so think out of the box. We can't use the same tools that we had that started this crisis
Mhm.
in the first place. Always a great time talking to you, sir. Thank you so much, Sonny Africa,
Okay,
Executive
thanks,
Director
Danny.
of One Foundation.
Thank you.
That's a first look into the business day. Today is May 11, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danny Laurel, and we are One News.